Investing News Network, and here today with me is Brien Lundin, editor of Gold Newsletter. Thank you so much for joining me today.
Great to be with you, Charlotte.
Great, as usual. So, the last time we spoke, I believe, was in October.
Yeah.
I believe you accurately predicted that in December we'd see a rate hike.
Yes.
And that would act as a launching pad for gold in the new year. So that's great.
Thank you for remembering that. I appreciate that.
Yeah, I checked back to see. So, can you offer us another short-term prediction for gold?
No. Actually, yes. I think we're at a risk, as we talk right now, of perhaps a very short-term weakening in the gold price. I think that the structure of the futures markets is set up that we might see a bit of a smash down in literally the next week or two, but I think that if you want to know where gold's going, you have to look at the US dollar, and I think that there's an argument to be made, both technically and fundamentally, that we're going to have about another 3 to 4 months of dollar weakness, and therefore we'll have about another 3 to 4 months of gold strength, taking us close to the summer, and then who knows. But I do think that we're going to have a generally upward bias for gold over the next few months.
Can you talk about some of the factors that are causing a weak dollar?
Yeah, you know, what's happening is that the Federal Reserve is well on its way on its tightening and its interest rate normalization campaign. Whereas the Bank of Japan, the European Central Bank, the Bank of England, they're all just about to begin tightening. So all of the hot money out there that flows from asset class to asset class is now betting on where they see U.S. rates 12 to 24 months from now, and they're seeing that the Fed campaign will be ending, and that the rest of the world, the ECB, the Bank of Japan, Bank of England, are just beginning their normalization campaign. So the bet is switching short dollar, long the other currencies. That's why we're having some dollar weakness. That said, it's a bit oversold right now, the dollar is. So that's why I think that we may have a bit of a correction in the very near term.
Okay. So if you're an investor, how should you be playing this type of environment?
I think that the junior mining stocks have yet to respond to the rally in the metals, and I think at any weakness, if we do have a bit of weakness in gold, and really regardless, because they haven't responded yet, you need to look for junior companies that have large resources, large identified gold and silver resources. They have yet to really respond to this, and they'll be the first movers. A few months from now, as we're getting ready to get into the summertime, I think you want to look at the exploration plays, but right now the companies that have large resources are really a place to be.
Okay, are there any specific companies you would mention or specific jurisdictions you think are good to look at?
Well, from an exploration standpoint, I'm really excited about the Golden Triangle area, and we're going to be in Gold Newsletter focusing on that this spring and trying to develop some reports that develop a portfolio of those kinds of companies. But you know, other than that, it's pretty obvious what some of the companies are out there that have big resources. First Mining Gold, Sabina Gold and Silver, companies like that, Almaden, Almadex, companies that have already proven that they have a large resource base. They're going to respond.
Okay. So outside of gold, we've seen a lot of metals moving up recently. Where else should people be looking? What are you looking at?
Well, the energy metals are an exciting area. It's you really need to focus on separating the wheat from the chaff there, and that's an area I'm trying to look at more. Obviously, cobalt, lithium. I think copper. We're looking at copper technically. It's backing and filling right now after that really strong rise it's had. I think that's going to be very good going forward. I think there's a theme out there of concerted global economic growth, and that's helping the base metals. I do like copper in general, but you can find some companies that have copper gold porphyries. I think they're going to benefit as well.
Okay. Looking at those energy metals companies, are there different factors investors should look at when they're looking to separate the wheat from the chaff compared to gold and things like that?
There are so many factors. You know, you look at the energy metals, and it reminds me a bit of the old days of diamond exploration. It used to be, you know, gold and silver are very simple, relatively simple. You look at grade, you look at the type of deposit consistency. When you get into things like diamonds, and you have all kind of other factors, valuation, ratios, the size of stones and everything else. When you get into the energy metals, there are a lot of other factors. There are a lot of similarities with base metals, and that logistics are huge. You have to be in the right region. You have to have water supplies. And a lot of these, especially cobalt, are byproducts. So there's not that many primary projects. So you have to look for grade and consistency in large-scale resources, which aren't that common. So you really have to do your homework.
Okay, last question. What overall trends do you expect to see in the mining sector in 2018?
I think that I'm really uncertain on that because I think it all depends on the metals, and we had a powerful 6-month rally in 2016 in the metals. Last year we had a rally, but it was more of a stair-step pattern. The question remains to be seen. That will be the big question in 2018. Are we going to see something like 2016? Are we going to see something like 2017 that's more halting? Or are we going to see something that's going to take us through the whole year with rising prices? So there are some technical and fundamental arguments for the latter. It's hard to predict, but I do think we're going to have an upward bias for this year, especially the first half. But it remains to be seen, really, how that's going to be more characterized.
Okay, well, we'll have to check back in with you.
You have to check back with me, yes.
Okay, that's all for me for now. Thank you again for coming.
Thank you too, Charlotte. Appreciate it.
Once again, I'm Charlotte McCloud with the Investing News Network, and this is Brien Lundin.